let's talk about Russia and Ukraine. Is that going to have an effect on real estate? Lisa, you go first.
Absolutely, absolutely. According to the data that I'm looking at and everything, okay, and again, these are all new, so I'm sure it's going to fluctuate and everything like that. Russia doesn't have a huge real estate market in the U.S., so you may see some sales from that, but I don't see that it's going to really um, make that huge of a difference. That's my opinion. But again, this is such a new thing. We'll see what's going to happen in the next few weeks and whatnot. But it drives everything else up. It's driving gas prices up. Lumber prices is still up. Labor is still very limited. So building houses is still going to be really difficult, if not even more difficult, with the supply and demand and everything happening and not having enough materials to make what needs to be made. And right now the need is more houses. We need more inventory, right?
Right.
And unfortunately, this doesn't help this at all, which means the supply and demand gap is going to be bigger and bigger, which means last year inventory went down historical low. It's probably going to get worse this year.
Yeah, I think what's happening, because even some of our buyers kind of decided to hold off on buying, right? Like the
Because they thought it
moment,
was going to get better.
right. And like, well, like some of the responses I've been getting from a lot of our buyers are, Chia, I think I'm gonna hold off on buying because of what happened in Russia and Ukraine.
Yeah,
I think that some buyers are thinking that's gonna trigger a crash.
that's not
And
a bad assessment, though.
right,
It's totally
right, right, right.
understandable. Yeah.
But you and I know that's not gonna a crash is not gonna happen.
Well, we don't know, guys, but we have an inkling. Just because, things go up, things go down all the time, and everything.
Of course.
But again, what's affecting right now is the whole supply and demand, and the gap
Right.
is so much bigger. That's why Chia is saying that we just don't see that happening. But if we go into war, it's a possibility, though. Everything's going to be on a halt, and everybody's going to have this fear factor coming on in. I get that. I hope that doesn't happen. We don't know what our leaders are really going to do, how they're going to negate this, how they're going to be involved in this. It's still so new that there's so many possibilities that could happen. What I can say is either way, home ownership traditionally, historically, is one of the things that can help with inflation. As you guys probably already experienced, your raises aren't really catching up to what the
Mm-mm.
house is. Whereas 50, 60, 70 years ago, if you bought a house in the 70s, okay, your income was 3 times what your mortgage was. Now you're getting into loans
Mm-hmm.
that with FHA, you can go all the way up to 57%. And your income is not that much greater. We're talking about like if if you really maximize it and it's just you making your mortgage, you're basically doing paycheck to paycheck. And this is one of the biggest reasons why I do that monthly savings plan, so that you know whether or not you really, truly can afford it. And if there's any wiggle room, if there's anything happening in the economy, do you have some of that? If life happens, if a tire gets flat, somebody has to go to the hospital or anything like that, can you pay that deductible? Can you have a little bit of cushion for that?
Right.
Back in the 70s, 80s, even some parts of the 90s, yes, you could with a regular job. You didn't have to make over 6 figures in order to do so. And
Right.
now 6 figures is barely making it for some
Mm-hmm.
families
Mm-hmm.
in a regular, normal house.
I think it's really gonna happen. Like for the real estate industry, buyers, the buyers that feel that a crash is gonna come because of the war or the incident that's going on in Ukraine or Russia, I think that those buyers that are calling it quits, there's a percentage of buyers in the pool that are thinking like that and they're kind of
Yeah.
calling it quits, right? But there are also some buyers that are saying shoot, there goes my competition. So you know what? Less competition means higher chance of me getting my offer accepted. So I'm gonna
Right.
keep on going because I've been looking for too long and I still need a home. And I don't want
Right.
to go back to renting because I'm tired of dealing with landlords, tired of dealing with month to month rent increases from my landlord, or potentially they selling the home, putting the home on the market, and I have to move anyways, going through all that drama. So those buyers that are still staying in the market, I feel that's their mentality behind why they are still staying in the market, because there are some buyers that are leaving the battlefield right now, buying a home.
Yeah.
What do you think about that
Yeah, absolutely.
assessment?
I mean, earlier when you showed that little mountain, I already kind of had that inkling in my head. It's like, okay, well, that's one of the reasons why people are feeling like, okay, I'm going to wait a little bit to see what's going on with Russia and Ukraine so that I can see if it's going to fall. Then that's where I want to jump in. So part of the competition is out. Plus, the interest rates went up. And unfortunately,
Hmm.
there's a pretty good size pool of people who unfortunately were told to maximize and get the maximum, and now
Yeah,
they're already priced out and they have to go lower. But once you already see something that you like in the 500 range, it's kind of hard to go down to 450 or 400, especially when home prices already increased significantly from last year to this year.
right. Yeah, it sucks, for a lot of first-time home buyers. It really does. I feel for everybody right now. Um, I I hope the U.S. don't go to war because that's not gonna help. Um, I do I do think though that we might not go because of everything that's going on right now.
But even if
I
we don't,
I'm not gonna try to go conspiracy theories right now, but then I was sharing this with somebody the other day. I was like, why does it feel so coincidental that this is going on with Ukraine and Russia, and then and then gas and oil goes up, and then all these dealerships are coming out with electric cars. Do you get what I'm going at?
well, you said we are not going to talk about conspiracy theory, but yes, of course I think that, yeah, of course. And that's the thing. Even if we're not involved, guys, this is going to affect everything worldwide because,
Indirectly.
yeah, I mean, um, Russia's ally is China. Everything pretty much is made in China. So if they stop the imports of that, what do you think is going to happen?
Mm,
We can't get more stuff. We can't make more houses. And what's going to happen? It's not going to get better. So indirectly or directly, regardless of us being involved, this doesn't help anybody worldwide. Not that I can think of, but of course, that's just my opinion, guys.
yeah, for sure. But yeah, if you guys have any comments or concerns or anything in regards to that topic, like put it in the live chat. We would love to hear your perspective on how everything's going right now, how you feel about the market. It'll be good to get somebody else's perspective on this besides me and Lisa. But the next topic we wanted to talk about was a lot of big banks are letting go of all their employees. Well, not all, but a big
Oh yeah.
significant.
It's a big significance. You have to understand too, guys, that in 2019, when COVID happened and everything like that, and that's when everybody thought that, oh, okay, everything is going to go down. The market's going to tank, right? People are not having jobs. Small businesses are losing their business. But at the same time, the surge of tech companies and big, larger companies allowing people to work from home made people decide that. I was like, hey, if I'm going to be quarantined, I want to be quarantined in my own house. I don't want somebody else, my landlord, to have control of where I'm going to go, because that's where some of the home sales were coming from. Landlords were afraid of the whole eviction moratorium, and some of them were able to let go. Some of them, unfortunately, weren't able to do that, and they're still going to litigation and things like that for that. Okay, and because of that, the mortgage industry actually increased during those times. So they hired a whole bunch of people. There was over 50% of people coming into the industry, so new people. And these big companies, especially the online ones now, with technology being so fast online, they're hiring a lot of people in the call center facilities. They don't do the analytics and everything like that. They're just trying to crunch in numbers, getting as many people as they can. And with the interest rates lowering, there was an influx of people refinancing because it made financial sense. Okay. And now that the interest rate went up, a lot of, like, I would say about at least 43% of refinances have completely halted. Okay.
Have you noticed that on your site too?
Oh, for sure. And I don't do refinances for people unless it's financially sensible for them. So when you guys refinance, you got to make sure you look at the numbers, because a lot of times I see people who bought homes and they are getting into a lower rate and everything like that, which is grand because everything looks pretty when you look at your monthly payment. I was like, oh, I'm paying for less. But if you already had your loan for 23 years, that means you've already paid off 7 years, and you go back to a 30-year and you're looking at the monthly savings is only $100, you just put in $100 every single month and pretty much forego the last 7 years. It doesn't make sense, right? So when you're doing that, you got to take a look at all the options. When I refinance anybody, I show them the 30, the 25, the 20, and the 15-year. And if, let's just say, for instance, if their income is a commission base or a bonus base where they don't know if they're going to get a big check one month or whatnot, we do kind of like also a velocity banking type of thing where, okay, why don't we stick with something that's a little bit in between, a little bit more comfortable for you, okay? And on those months that you are consistent, you can absolutely put more in. And when you do that, you just shaved off and made your own 15-year, made your own 20-year at your convenience. But on the months that's tough for you, at least you have the option to make the lower payment. So everybody's situation is different, guys. Right now, most of the time, if you guys did it last year, it probably doesn't make any sense because interest rates started going up in August already. It slowly trickled, and then you really, really started to see it at the end of December, and then really, really saw it coming into 2022. That, and again, with purchases, with homes just not being there, the inventory is not there. The purchase market, yes, we heavily concentrate on that on our end, but I have so many people that are pre-qualified, and I love to see that. Chi and I love to see people who are excited to purchase a house, and we tell you, we got to be aggressive. This is how we do it. And this is the reason why I give worst case scenario situations so that you're super duper prepared and you get to have a better chance at being that 9% that actually wins out on the offer, instead of the people who are like, okay, well, we're priced out. We're $2,000 below what we need. We're $5,000 below what we need.
Yeah. Lisa, you're out of focus for some reason.
Oh.
Yeah,
sorry.
I cannot see you anymore.
Oh, I don't know why.
It's doing a little bit better. Okay, there it goes.
Okay. I guess I just needed to move it a little bit.
Yeah. But yeah, I see what you mean. And that's exactly what I tell all of our clients, that get pre-qualified and go out house shopping, is leave that buffer, right? Because it's so important. Don't try to max out your pre-approval. But let's go back to these big banks that are letting go of their employees. What type of banks are they? Like, are they more independent mortgage banks, or like are they like Wells Fargo? Those type of big.
Anytime you have an influx, okay, and so starting 2009 was where it really, really picked up and everything like that. They're going to have more people. And anytime you have any type of business, you want the people out there in front, the salespeople who are trying to get more people in. And then you also need the operation. So those are the legs that operate the business, right? And when you have a good size of both, everything runs so much more smoothly. But operation people are usually people who have to, by law, have a salary, whereas people like myself, we're commissioned only, and therefore it minimizes the company's expenses. Now, keep in mind, guys, okay, the call centers, companies that are heavily just doing businesses just like that, and there's a lot of turnover in our industry, period. But when that happens and it slows down that much, they're cutting off so many people. There's companies out there. I'm not going to name all the companies out there, but there are companies. They were known to have a Zoom meeting. last December laid off 900 people on a Zoom meeting, and they just did another 3,000. There's going to be mergers. You're going to see a lot of things happening, especially back in the last crash, over 150 banks. I mean, we were getting data every single day, and during that time, all we could think about was, okay, are we next? Are we next? Are we next? You know? And there's going to be a huge, huge influx of that going forward if this trend continues to happen, because they cannot continue to keep the operation on salary when there's not enough income coming in. Yeah, not enough at all. So
isn't that crazy?
It is crazy. It is crazy, and it is very, very scary.
Me thinking about that, like I feel like these loan officers, you may say, right? They have so much pressure over them that now it's like a sales. It's like back to sales now, right? Like everybody's a number now. Cause
it is really, really sad. It is really sad.
It's putting a lot of pressure on them. Cause man, I gotta make that sale. I gotta make that sale. That's the mentality now for them.
Absolutely, absolutely. So this is where you guys, as the consumer, this is how it affects you guys. When somebody's in that type of environment and they're just thinking, okay, I gotta pay my bills, I gotta feed my family, I gotta do this, and they're telling me my quota is 10, 20. You know, it doesn't decrease, guys. It should. You would think that it should, because it would be fair for the employee. But at the same time, it's like they cannot employ and pay for all the employees if not the same amount of volume coming in. And it's not. I mean, we're being affected on the refi is one thing, but we're also being affected on the purchase because there's no inventory, or very, very little inventory. And that's across the nation. It's not just a California thing.
Yeah.
Okay. And the ones that have great technology, that technology comes with also a very, very high price tag. Okay. And it's an ongoing subscription sometimes that they have to make. It might be a several years contract that they have to hold on to. And again, they may not be able to break that contract, but what they can do is they can let go of more and more employees. The turnover rate historically, when the last recession happened in 2007, the loan officer turnover rate was 51%. Last year was at 21%, guys. I don't know what's going to happen this year.
Wow. I did not know that.
It's hard. It's rough. Everybody thinks that it's what you and I do is like, it's easy, but it's not, guys. You know, at the end of the day, we do this because we really do want to educate people. I'm sure I said this several times before. Chi and I come from very humble beginnings. There's a lot of things that we wish we knew when we first bought our home. I first bought my home before I was in the industry, and there was a lot of things that I wish I did know, right? And a lot of things I didn't catch at that time. So the things that I do now are the things that I wish I caught at the time. So I share that with you guys, and I share that with everybody that's in our circle, so that you don't miss the things that I missed.
Yeah, I feel like the only way for this whole market thing to turn over is they're going to have to increase building.
Yeah.
But I feel like when that happens, I think what's going to happen is when they do that, because they realize, shoot, we're still having an inventory issue. So build, come on, builders. And I feel like they're going to just open up the faucet wide open, and there's going to be an influx of inventory coming into the market.
That may be the case, because that's kind of almost what happened the last time, Chia. I think what might happen is that with everything going on and everything like that, jobs aren't going to be as stable. And unfortunately, if you maxed out your qualification and everything like that, I would really, really consider an exit plan. Okay. Those of you who are in a really tight situation, either downsize, move in with family for now. I know it's annoying sometimes, but it's a lot more annoying when you don't have a compromise. Yeah, it's a compromise that you're going to have to make sometimes. Tough times calls for sacrifices. Okay. And I've had to do it before too, strategically. We all stay together for a bit and everything like that. sell when it's high and everything like that. And then when the dust settles and everything like that, everybody goes out on their own. I'm just really fortunate. My family's amazing. Most of the time we do actually really, really get along. So that strategy works for me. It doesn't work for everybody. I totally, totally get that. Okay. But consider renting out one of your rooms. Consider doing a little Airbnb here and there. If you have a guest room or a in-law quarter or something like that, just to prepare yourself with a little bit of cushion.
Mm-hmm. I do want to share another insight about if, like, because everybody's praying for a crash to happen, right? There are those that are asking for a crash to happen because that's when inventory is going to come and prices are going to go down and stabilize. And then there's a percentage of people that are saying, shoot, like, the crash is not going to come, or it doesn't even matter if the crash is here. And I'll say this, a crash happening or a correction, it's a normal market thing. Markets goes up and market comes down. That's how it's been. If you look in the past, historically, history repeats itself. Like right now, we're very at the tip of the iceberg. We're very at the typical point. And we've made it a long way. We've been at the peak for a long time, right, Lisa? And we are overdue for a correction. But
Yeah.
I will say this, when that correction comes, the people that are waiting for that correction to come, it's your payments are still going to somewhat be similar because interest rates are going to go up when the prices go down. And the price is not going to go down significantly to where it's like, shoot, right now it's 450. It's going to be 350. It's not going to be like that. It'll be dropping in increments. Like, here, let me show this to you guys again. Like, you guys see how it's on average right now going up 3%, right? On a month-to-month basis. Instead of it going up 3%, maybe when the correction happens, it's going to be going down 3%.
So, guys, the reason why this is the case, again, it's supply and demand, right? There's still more people, which means there's still more people waiting for the market to crash than it to not crash. Unlike the last recession, people didn't want it to crash because there's so many people in houses already, and they were hoping to flip that property in a year or two, so they didn't want that to happen, right? Mm-hmm. Now everybody's kind of like, quote unquote, learning from that and waiting for that to pounce. But when there's still more people waiting to pounce, it's not going to happen, because as soon as it drops just slightly, you got somebody already ready to go on. Because when you price out the price of what rent is right now, it's either similar, close, or not that much more. Okay.
I am curious.
When Chia and I do the analysis and everything like that, right? We're looking at it. How much higher is it from your rent? How much lower it is? And a lot of times it's very, very similar. There's so many circumstances where we're looking at it, it's very similar. And then sometimes when I'm pricing it out for people, when it's a little bit over, they actually have an extra bedroom where they can actually rent it out to roommates. Mm-hmm. So it kind of covers that situation for them. And that's the other thing too, guys. If you're in a tough situation, when you are an owner, at least you still have the option of renting out. If you have a 4-bedroom, okay, for instance, you have an office, you have all this stuff, right? It's all grand and everything like that. But when tough times comes, you have actually choice. You may not like it, but at least you even still have that choice of renting rooms out to cover for that.
Yeah. I mean, speaking about rentals, I'm just searching on Zillow rentals right now, right? Okay, so look, this 3-bedroom, 2-bath, 2,000 square foot. It's in the Rosemont area, so it's a pretty nice area. It's going for $2,300 a month. This home right here is 1,100 square foot, 3-bedroom, 2-bath. This is not in Rosemont. The area is not as good as Rosemont. It's in it's a pretty unique area. I'll just say that. Okay, it's a 3-bedroom, 2-bath, almost 2,200. You like that?
Very unique.
Yeah, 2,200. You know what? You know what gets me? You know what I find so fascinating too? Some of these rentals, you have to have three times the income of the rent. So that means you have to make $6,000 a month to even qualify for this home. I don't I don't see how that is doable for the average Joe. Do you, Lisa? I mean, this home is advertised. It seems like for a Bay Area person.
Um, yes and no. I mean, usually when we're talking about a rental situation too, Chia, remember, I mean, all the other rooms, they might be in a roommate situation too. And that's typically what has to happen. When you rent, you do what you have to do in order to have a roof overhead for your family. And
Right, but
when you drive down these certain areas in the Bay Area, Chia, it's not like everybody there makes, over a
right,
$250,000. It's not that at all. There's a lot of regular people that still make less than six figures. But if you drive down most of San Jose, okay,
yeah,
that's where I grew up. That's San Jose is always going to have my heart, you guys. But I drive down almost every single street that I used to live at. I get so annoyed because the street that I used to go to and everything, it is just so crowded. And the parking, it's so difficult to find parking in residential space because there's 2, 3 families living in every single house.
Oh my Lord.
Mm-hmm. It's super annoying. Every time I come down there to visit my sister-in-law, to visit my brother, I love them. I love eating out there and everything, but I hate the parking. It's starting to be almost like San Francisco to me.
I think it's gonna get worse.
It is. And guess what, you guys? It is going to trickle over to where we are too. That's how we can afford it. Sacrifices just have to be made. In San Jose, there's a lot of houses. The permits to make an additional unit in San Jose is much easier now because of it. To make a 2-story, it's much easier now. Okay, and it is very common for people in the Bay Area not to have a garage, and that's the reason why there's limited street parking, because they converted their garage into another unit so that they can rent it out, so they can afford their mortgage. And if you have to do that, so be it.
Yeah, I can't do that. Man,
No,
I'm
no,
looking at these rentals.
they're two different things, right, Chia? You won't do it
I
because
know.
you don't have to. You don't have to. But a lot of times when
That's
people have
true.
to, guys, push comes to shove, you can't do that with your rental property, is what I'm saying. But you can do that. At least you still have that option with home. And then when times are good again, you can say, hey, we don't need to rent this space out anymore, and you can evict your tenant. Oh, that's nice though.
This home's nice, huh?
Yeah.
This is in downtown. Look, 3 bedroom, 3 bath, 5,400 a month.
Yeah. Well, that's where
Where's
you
Midtown?
live when you want to. That's where you live if you're a traveling physician,
Yep.
right? And the company pays for that, or that's the kind of house you want to live in if you're trying to keep up with the Joneses too.
That too. Yeah, that's exactly what it is. Holy moly. See,
Very
like,
nice.
this is crazy. Like, rent now, I don't see anything that's under 1,000, like in the $1,000 range at all. Like, but even below $2,000 a month.
Well, I just priced out a loan for somebody because they were paying for a 2-bedroom, 1 bathroom in Lincoln for
2 bedroom,
$3,100.
1 bath.
In Lincoln for $3,100.
Oh Lord, Lincoln. Oh
Mhm.
yeah, Lincoln's a nice area.
It is a nice area, but for 2 bedroom, 1 bathroom, and $3,100 every single month, last month, and you have to have good credit too. I mean, you might as well get a house.
Golly, California is more pro tenant, huh, than pro landlord.
Yes,
Yeah, I
yes, it
figured.
definitely is. It's honestly quite annoying because everybody thinks that once you're a landlord, all of a sudden you
You're
are
a
part of the
baller.
yeah, you're part of that 1%. You're not. It takes
Yeah.
a whole heck of a lot to get to that point. But we
Oh
get
Lord.
taxed, everything.
Okay, I'm
And
done.
most first-time investors, or if you have less than 5 units or 5 homes, guys. I know a lot of times people are like, there's like slum landlords and everything, and which there are. Don't get me wrong, okay? But most landlords, again, they've been homeowners before, and they understand the value of owning property. And a lot of these people are only making an extra $100 to $200 every single month, hoping to increase their property value so that later on in their retirement they can sell it and live off of that. Okay.
Mm-hmm. That's what's going on.
Mm-hmm.
One thing I also wanted to talk on today is for I've been seeing a lot on social media from other agents posting about how um some of their clients or some of the buyers are not willing. They're wondering why their offer is not getting entertained in this market, and so they're
Mm-hmm.
blaming their agent, or they're asking other agents for advice. They're saying like, do I really have to go above asking price to compete to get the house, like even if it's an ugly home? And I just kind of want to share my perspective on this. If you guys are a buyer right now looking to buy and you're not overbidding, you're not going to get the home. I know it sucks, but that's really the nature of the game right now.
Yeah.
Every home, if it just came on the market, you're not the only buyer that's targeting that home that's going to go and look at it. There's going to
Yeah.
be hundreds of other buyers right behind you or in front of you that's going to be looking at it. And guess what? They're going to be putting a bid on it. So, like, if they understand the game and the rules of what's going on and what the seller is looking for right now, here is a super competitive offer that a savvy buyer in today's market is going to put. They're going to go over asking a minimum $30,000, okay? Minimum. And then they're going to change their term to, I'll buy the home as is. Even though I do inspections, it's just for knowledge base. And then they're also going to put another term in there that says, if the home does not appraise for the amount that I'm putting an offer at, I will still give you the cash difference of up to $10,000. So that way you can still be guaranteed a net of $10,000 above appraised value. As long as it does not exceed the total purchase price of my initial offer. That is a
Right.
very aggressive offer. That's not even the most aggressive term, but that
Exactly.
is the average typical term right now that a buyer is submitting. And that is why their offer is getting entertained and some buyers are not. So it sucks that those are going to have to be the term that you have to start off as a standard, but it doesn't have to be. If you're not a picky buyer, yes, I said picky buyer. If you're not a picky buyer and you don't want to use those terms that I mentioned, then you have to target a different home that every other buyer is not targeting. You need to target a home that's been on the market for over 30 days, that came
Yeah.
back on the market and it's super ugly. Nobody wants it. You're going to have to target those homes, because if you're targeting the ones that just hit the market, every buyer is getting that same notification from their search app, whether it's Zillow, Realtor.com, Redfin, their personal agent's website. They're getting that same notification as you, and they're going to go look at that home.
Okay, Chia.
So,
You get to see these homes, okay? So I get to live vicariously through you and through our joint clients who share with me and tell me, I say, oh, I really like this, and so on and so forth. How many ugly houses do you really see out there? Because I'd like to buy it too. Probably not a lot,
everybody's definition of ugly is different, right? So,
right?
like, I'm talking about first-time home buyer perspective here, okay?
Yeah,
For a
yeah,
first-time home buyer, I think the mindset is always, oh my gosh, my home is going to be just like what I see on HGTV. Fully
yeah.
remodeled, open concept, everything is granite countertops, tile and laminate flowing throughout the house, no carpets because I hate carpets. And super light color, neutral colors, and modern appliances, etc., etc. But
Okay.
I'm telling you, go ahead.
I was gonna say rewind. Okay, you guys, please know the HGTV is super exaggerated. Okay, it would take them forever and a day to just do one episode if they actually talk about the real reality of true real estate. Okay, guys, you're not gonna go out there, buy 3 homes and decide, okay, which one do I want? Okay, the
Right.
market is not like that. If you don't like carpet, guess what, you guys? Here's the thing that I super appreciate about Chia. He has a wonderful, amazing wife who actually knows how to envision the house and how to decorate it and what floors needs to do. The reason why that's important because that also migrates over to Chia, where he knows kind of how much things would cost. Personally, if I saw an ugly house, I want it to have carpet. And here's the reason why, guys. I want it to have carpet. I want it to have the ugliest tile ever because then I don't feel like it's such a waste to rip that stuff off. Ripping carpet is not as expensive as ripping out ugly tile. So I'm
And
actually okay with that.
and you make a good point, right? Like if it's got ugly stuff, you're buying
Yes,
it at the retail cost of the condition of it, right? So
yes,
wouldn't you rather buy something in that condition to where you're gonna change it out anyways and not have to pay for it on your mortgage versus
yep,
if it's already been fully remodeled by a flipper
yep,
and you're gonna go in there and take it out anyways, it's still part of your mortgage, whether you like it or not.
right. So here's a strategy that I've been doing with my people for the last 5 years ish. Okay, they buy a decent house and sometimes quote unquote ugly, right? I mean, I've purchased homes and flipped homes that are like, if you want to talk ugly, it's so disgusting that you can see the mold, you can smell every type of feces of any animal and human that there possibly could be, and it almost made me puke. So to me, that's ugly, but that's for another time, right? And I'm telling you, once they purchase it, as long as it's at least livable, you guys, okay, they only had to wait about a year. Then they refinanced out, and the house was worth so much more that only a little bit. And I have spreadsheets of where to buy certain things. There's so many places that you can buy really, really good stuff for a lot less. And the uglier it is, the easier for it to be removed. And the demolition costs can be quite costly if it's already a granite countertop. Granite used to be the style in the 80s, in the 90s, in the early 2000s. And now it's quartz. People like things a lot more clean, a lot more bright to make the house look a lot bigger and everything like that. Imagine having to actually pull out all that stone that
Right.
actually is a lot more costly. So
Another
when you do
thing
that,
too,
yeah.
another thing too, like as a first time home buyer, you gotta ask yourself because we are in such a pickle right now of a seller's market with limited inventory and prices so high. You gotta ask yourself, would you mind renting this place out if you had the opportunity? And 90% of the time, the answer is yes. Many people would not mind renting out a so-called ugly home. So then you have to have that mindset going in, right? If it's getting very competitive, if you don't mind renting it out, why not buy it instead? Buy it so that way you could at least you paying your own mortgage instead of your landlord's. And then over the years of living there, you can make it your own. You could put in those granite countertops or quartz like you've always wanted. You could paint the house white if you wanted. You could change out the carpet to laminate or tile if you wanted. But at
Yeah.
least it's yours. So if I would say transitioning to like if you should be buying a home right now because of the market and all that and the uncertainty because of Ukraine and Russia and everything gas price going up. There's so much uncertainty right now. If you're asking yourself, should you buy? I would say this. Do you need to buy? Like do you need to buy? Are you starting a family? Is your family getting bigger and you need to have your own privacy? And does the number make sense? Like
Mm-hmm.
if you were
That's
to
the
rent
biggest
this,
thing.
that is the biggest thing. Does the number make sense for you to be able to buy something that is within your means and still be somewhat affordable and you can still get by? Because if you're renting the same thing that's within your means, is it about the same? Then, there's a lot of factors you got to look at. And if the answer is, I don't need to buy, I just want to buy, then maybe you might want to wait because there is a lot of uncertainty, you know? But then right now, what I'm seeing is a lot of first-time home buyers that are buying and looking to buy is because their families growing, outgrowing the home they're at right now. They're starting a family, and then now they're previously living with friends or family, and they want to get out from that because they want to have their own place, their own home. So, like, that's really what you need to ask yourself. And another thing too that I got asked the other day was, Chia, what if I buy right now and it crashed? And my house value that I bought at 450,000 goes down to, like, let's say 300,000. What am I gonna do?
Mm-hmm.
One, that's not gonna happen. Again, it's just gonna go down like probably 3% or so. But let's say it does happen. You need to ask yourself, do you still have a job? The same job that you had when you bought that house at 450,000. Did the job pay stay the same, go up, or go down? If it stayed the same, and then if you answer yes to that, the third thing would be, what type of interest rate did you get? Was it a fixed rate? Was it an adjustable rate? Because I think what a lot of buyers are getting confused with is they think that it's going to be like during the 07, 06 days where people were buying with adjustable rates, right? And when the market tanked, their interest rates went up. So their mortgage doubled overnight. And so I think that's what a lot of first-time home buyers are scared of. As long as you know that your interest rate was fixed for 30 years and you still have a job that's stable when you bought it at 450 and you're not going nowhere and your pay is still the same, then you'll be okay. Just write it out until history repeats itself and your home is back on top again. Then you'll be fine. And then guess what's a bonus to that? Because you ride it out for like hopefully 10 plus years, you have already reduced the principal on your mortgage to where now when it's worth 450,000 again, when you sell it, you have all that equity. Or if you rent it out and do like a cash out refinance to use that cash out to down for a better home or a bigger home, you have all that equity because you've been paying down the principal for those 10 years and the market went up.
Exactly.
So you just got to ride it through.
You hit the nail on the board. And this is the reason why I'm going to go back. Take a look at your numbers, you guys. Okay. Whatever the bedroom size that you guys have and everything like that. And, in the event that it does crash, worst case scenario, then that does happen. And you just bought one. And let's just say what happens if it happens like it was in 2007. Okay. And you bought a house of 500. Now it's only worth 250. Okay. Yeah. Well, guess what, guys? You're not going to be the only one that's going to be hit. Okay.
Right.
This is what happened the last time. The last time loans were a lot different. Okay. There was negative arm loans. A lot of these homes that were in these types of loans, basically the first year you start off with a very low attractive payment. Second year's a little bit higher. Third year's when it starts to really, really hit you. In that third year, if you bought in 2005, 6, 7, oh no. Because not only is your mortgage a lot higher, you cannot even rent it out to close to what your mortgage payment is. So that's not an option. You couldn't sell it because now it's worth a lot less than what you bought it for. So that wasn't an option. Well, it had to be, but we'll get to that later. And then even if you rent out the other rooms, it wasn't enough because that type of loan kept increasing. So why didn't you refinance at that time? Again, the value went down, so you couldn't refinance because you didn't really took a look at the numbers. And the thing is, it's not a consumer only thing, guys. A lot of times, those types of loans paid out loan officers really, really much, much higher than the traditional loans. So people got greedy, unfortunately. Okay. Yep. And it was really attractive for the first 1 or 2 years. You can buy $1 million home and only pay $2,000 a month. How attractive is that? Right. Mm-hmm. But in the long run, in the long game, when you don't look at those situations, plus it was a .com bust too. So a lot of people lost their jobs, couldn't afford the house was bleeding, all sorts of stuff. Why is it different now? Because those loans aren't available now. Okay.
Right.
You have to pretty much give everything except for your DNA and your blood sample, right? It does take a little bit more time. And if you have the right person to look at your numbers and don't just depend on them, if they're not doing that monthly budget for you, do it yourself, guys. I showed you how to do it the last time. If we can go into that next time too, Chia, again, so that people have that idea to do it on your own. So you can say, hey, plan A is that we're going to go into this situation and it's going to be good, right? Everybody wants that. Plan B, worst case scenario, if I have to move in with my parents and rent this house out, I'll be covered for this for a few years until the market corrects itself, right? Or plan C, I don't have parents I can move into or family that, that can do that for me. Can I rent out at least a room or two that will allow me a little bit of breathing space until we get that back to that good space? You absolutely have a lot more of those options now than you did then.
Another thing too is we're human, you guys.
Mm-hmm.
And because we're human, we are always in survival mode, right? And when we get into a lot of pressure to where we're in survival mode, we find a way to make it work. Kind of like what Lisa was saying earlier when I was going over those high rentals. When people have to rent something that's super high, they find a way to make it work. They go and ask friends to become roommates, family members to become roommates so they can combine their income, whatever they got to do. And I have hope, that as humans, we will find a way, through all of this. And yeah, it sucks that it is the way it is right now for the market, and a lot of first-time home buyers are not going to get to see that opportunity this year to become a homeowner. And they're calling it quits. I feel for them. It sucks, but then if you are in the market right now still, really, it's just a long game now. You just gotta be super again aggressive on your offer with those terms I mentioned earlier, and you just gotta keep going next. All right, I didn't get this one. Next, let's go look at more homes. All right, offer didn't get accepted too. Okay, next, let's go look at another one. If you have that mentality going into this market, you're gonna win. You're gonna find a home. But if you are coming into this market and you are getting shocked and jaded, and you're getting let down every time that an offer that you submitted got outbeat or outbid, then you have to change your mindset to being more or less what would you say? So that way you're not so emotionally attached to that home, because then that way if your offer doesn't get accepted, you're not so you won't get too beat up about it, because it's gonna happen. I guarantee you, in this market, as a first-time home buyer, you're gonna be very disappointed on your first offer, your first few offers. Okay,
First 10,
first 5 to
normal.
10
It's normal.
offers.
Yeah, it's normal,
It
guys.
is normal. And going back to what I was saying earlier, how a percentage of buyers have dropped off from the game, meaning they're no longer buying. Even though that happened, that doesn't mean that the market is shifting. Okay, I'm getting people saying, okay, great, so buyers are stopping, prices are going to go down, right? No, here's how it looks like in reality. Before, we were receiving 50 plus offers on a home. Because a lot of buyers dropped off, we're receiving now like 10 or 20. Is that still competitive? So that's something
It
to
was.
that's something to put into perspective. Okay, before we were super aggressive with buyers being flooded into the market, but because a lot of buyers are dropping off, number of offers went down, but it's still competitive. You still gotta be on your A game, and you gotta go with your best offer, because the last thing you want is you found a home that you love with your realtor and you submit a bid and you knew that wasn't your best offer, but you went in anyways. And then when you
Mhm.
finally received news that shoot, your offer did not get accepted, it wasn't even top 4 that was countered, you tell yourself, damn, that wasn't even my best offer too. And then now you're crushed. So I would say this: always go with your best offer. Always go with your best offer. Why? Because then at least you gave it your all. And then that's how you know that it wasn't meant to be. But always go with your best offer. That's what I would say. Hey, Mina. So, what else? What else did we got going on? Did you got anything you wanted to add to that, Lisa?
No, I mean, I think you addressed some really, really good concerns out there and some very normal concerns that people have out there. It's very normal for you guys to feel that way. We are in uncertain times right now, guys. Okay. I would highly recommend for you guys just to take a look at your own situation right now. Try to save as much as you can, even if you're not purchasing a house and whatnot. Okay. You just don't, we don't know what's going to happen in the next or this coming year. I mean, we never know, but especially now with what's going on.
Yeah, I think this year we got off to a really bad start
Which means,
nationwide.
yeah,
This year out of the nation, we are so off to on the wrong foot, and like I just hope that we like start transitioning from that to something good, something better, so that way everybody could win, right?
yeah,
And it will happen. It's just a matter of shoot, are we patient enough to wait for that day to come?
yeah,
And I'll tell you guys this: we, me and Lisa was saying this earlier before the live. We know that it's tough times right now for a lot of buyers, for everyone, for tenants even. But you just gotta you just got to be super super positive about your situation, and you just got to remind yourself that it's just this whatever everybody's going through right now is just temporary.
yeah. You gotta be
And you're
willing
gonna,
to put up the fight,
yeah,
honestly.
you
I
have
mean,
to.
literally.
And you are going to be glad that you've gone through that, because then you came out a winner. You survive, you thrive, and you put on thick skin, and you've
Yes,
gotten some experience now to where when it happens again in the future, you're like, oh, it's gonna pass, you know.
yeah,
But then I think when people, when a lot of people are going through something like this, like a struggle, they're too zoned in on it that they forget about the end of the tunnel. They're inside the
right,
tunnel and they just think, oh my God, this tunnel is always going to be dark. I'm never going to get out from this tunnel. But that's not true. There's still light at the end of the tunnel. It just, you just got to ask yourself if you're strong enough to be able to go through all of that. You know, you
right.
just got
And
to be,
guys, you're not alone. I'm sorry, Chi, I didn't mean to cut you off or
no,
anything
that's
like
fine.
that, but I want to share that traditionally, usually, I would say 2, 3 decades ago, your realtor would be the one running for you, making the offers for you and everything like that. And you don't really get to hear all of that. But as of right now, okay, if you don't have your realtor and your lender partner fighting for you, you got to do it yourself as well. Okay. I mean, we're in this marathon, basically, that's what it is together. And you got to make sure that you find a team member that's willing to fight that fight with you, okay, and willing to have the guts to tell you the truth on how you're going to win this offer. Whether or not you take that truth or not is up to you. But as of right now, there are people who are winning. Wouldn't you want to be one of those people who are on the winning side? This is how you do it.
Yeah. And I'll close with this because, you know, we're running a little late already. It's really over an hour. And so I'll close with this. If you have an agent already, a realtor, and you have your own lender, and you don't trust their advice, you might need to find a new lender and realtor, because
Yeah,
that means that you felt that they did something that made you felt you couldn't trust them or trust their advice. If that is the case, then you need to ask yourself, shoot, do I need to trust them? Is it me, or did they really do something to make me feel the way I do about them? So if that's the case, you in this market right now, it is so important, like what Lisa said. Your agent, your lender, and you, three of you guys need to all be on the same page. Because here's why. When you're submitting an offer on a home, guess what the seller is doing? The seller's going through all the offers that they received, whether it's 10, 20, 50, and they're calling the agent back. They're calling your lender back. They're not just going to blindly accept it because you wrote really good terms. They still got to verify those terms. They still got to call and be like, hey, you submitted an offer for this client over here. Can you tell me a little bit about your client? Or vice versa. They could call the lender and say the same thing. Your agent submitted an offer for this client. Can you tell me a little bit about your borrower? And guess what? If your agent and your lender is not on the same page and they're not picking up their phone calls and they're not responding to the seller, you think they're going to choose your offer over 20 other buyers that did pick up their phone call? Because remember, at the end of the day, even though the term is what the sellers are looking for, the best terms, they still want to make sure that their home is gonna for sure close and not come back on the market. So if your agent or your lender is already not picking up their phone call when they're calling them to vet the offer, that's already giving them such a bad impression about your offer.
Mm-hmm.
So remember that. You need to, if your agent's not calling them, your lender's not calling them, or vice versa, you need to tell them, have you been calling them? Have you been getting an update? Like, what's going on? Like, and if it's not going on, you need to make sure that they're a team. Like, whenever I send offers out, I always CC my lenders, whether it's LIZA or not. The reason why I CC the lenders because so that way the seller sees that, oh shoot, he or she already input the contact information for the lender and the agent. So great, I got them all in one email.
Yep.
If they're not doing that, then something's going on.
Right. And it's a little bit non-traditional, but again, we're gonna fight and we're gonna do whatever it is that we need to do. Before lenders really didn't reach out to the listing agent. We don't know until you're actually in contract and everything like that. But in the last, I don't know, probably about 4 years, I've been doing it where, okay, I'll call the listing agent, text, and email if I need to,
Check in.
right? Yeah, just to let them know how solid you are. We are there to advocate for you.
Right.
Okay. And we're all going to have to put on our running shoes. It's a marathon right now, guys.
But of course, with everything being said, you, the client, ultimately make the final decision whether or not you want to go with our advice or not.
Yeah.
We're here to serve you. And with that, we're going to close. So thank you guys so much. It was fun as always. We will see you guys next time. Peace out.
Bye, Chi fam.